The broadcast is now starting. All attendees are in listen-only mode.
Okay, let's get over here like this. Let's get everything organized and then we'll kick this thing off here. Charts up, yes. Slides, yes. Volume, check. Audience view, check. All right. It's about 10 to 1 Chicago. It's December 12th. Apologize for last week, but after the Thanksgiving weekend, I just didn't have the voice to spend an hour in the room going over the setup. So we took last Thursday off, and now we're back on the track. So what we're going to end up doing here this afternoon is going over the CFRN trade setup in slow motion. So the guys that are brand spanking new, this is going to be a great syllabus for you to lean on. We'll break down the trade setup that Michael trades in the morning, and we're just going to kind of break it down so you guys can understand some of the terminology, buzzwords, the setup. So when he is, buying and selling things, you kind of have an idea what's going on. Okay. There was a big demand for this because guys on day one were a little bit confused on what was going on. Okay. So I thought, if I spent an hour going over this, you guys would have a good idea, almost a nice eyes wide open approach on what to expect when you're in the room. So for the guys that are brand new, this is going to be, again, a great syllabus for you to lean on, good cheat sheet. Okay. After I go over the setup, then we'll go inside a live market and we'll look for the same setup and we'll just pop in there and look for the setup. And what I'll end up doing is going inside the DOM. Let me get my highlighter here. This is the DOM. This is called the depth of market, and this is where we do our buying, and this is where we do our selling. Exactly what Michael's doing in the training room, but I'm going to do it in slow motion. All right. I'm also going to make some observations in the next hour, going over some of the traps and things that people fall into. Remember, I've been in the room from day one, and I'm in there every single day. I'm in the background just listening and seeing what's going on. On occasion, if I see something and Mike's silent or maybe stepping away, I'll pop in and I'll make a point. But I let Mike do his thing. But the point is, over the years, I've shared several, screen shares and snippets of people's charts and setups, and entertained a lot of questions over the years. So there seems to be a common mistake or a common pitfall that people fall into. There's a few of them, so I'm going to outline them so they're visual, and you can, maybe when that pops up, you can say, oh yeah, that might be a moment where you say, you know what, that's something Bert was talking about on that Thursday afternoon. So maybe that's my way of keeping you out of the trap. So so if you are a returning CFRN member, welcome aboard too. Again, this is a great time for you to ask questions. So ask away. As Michael said, sometimes it helps to hear it from somebody else. And so hopefully that's the case. And you have access to the question box as you do in the morning. So just ask away and let me get that in front of me. Yeah, and just ask away and we'll knock it out together. Okay. So that's kind of the game plan this afternoon. So what Michael's doing in the morning, I'm just going to break it down in slow motion. The beginning, like I said, might be boring for the CFRN members because I'm going to go over the setup. That's for the newbies. And then we'll get into it. The markets are moving today, so there might be some activity. And so that'll give us a chance really to maybe cut some things up and get some opportunities in front of us, okay? So I'm going to show you from start to finish how to enter, where to put the stop, when to exit, how to trail the stop, everything from start to finish. So it's going to be very transparent for you. So that's the goal and objective for this next hour. All right. All right. Before I present, I have to go over the disclaimers. Okay. And again, hey Dwayne, target. Okay. And like I said, before I present, I have to go over the disclaimers. And I've been around for almost 25 years, and I really don't like throwing this up and say, hey, take a look at it and then put it under the blanket. I'll take a few minutes to talk about it because over that time frame, I really have seen the good, the bad, and the ugly when it comes to trading. Okay. The disclaimer really is for those guys that are brand spanking new to the game. Okay. They're just learning about futures, the leverage of it. They're probably getting all the benefits of it, and no one really balances out the risk reward. All right. There is substantial risk in trading futures. No question about it, because we're dealing with leverage. Okay. If you don't have a trading plan, if you're not using stop losses, if you're not engaged in the marketplace, if you're not in tune with what's going on as far as news items, if you're not engaged in your own trading account, this disclaimer will hit you right smack dab in the face. All right. So that's why I bring it to your attention, because by the time people get to CFRN, they're knocking on their door. They've been to this guy, and they've learned this and that, and they've gone down the path, so they're pretty numb to losses, and they're used to this disclaimer really doesn't apply to them. They've been through the battle. They have lost some dough. That's why they're knocking on CFRN's door. Okay. Again, I like to say this is good for the new guys because you guys don't know. Okay. The good thing about all this, let me erase that, is that we are going to go over trading plan, right? So we're going to have a set of rules. So that kind of checks that box, right? We have a trading plan. Every trade has an 8-tick stop attached to it. Well, it checks that box too. We're on a 4-tick range chart. Okay, so that means we're looking at the market under a microscope. So that means you have to be engaged in the market. You need to be looking at what the market's doing, right? Well, that really checks that box. We're going to be executing on the DOM, okay, that depth of market that I highlighted earlier, okay? So you're going to be placing orders, you're going to be placing stops, you're going to be exiting the trade. So you're going to have to be engaged in your trading account, okay? So that checks that box, okay? So even though, this isn't basically a pleasant way to start a webinar talking about, holy smokes, the risks and all that stuff associated with trading, it is a reality. But if you go down the CFRN path, it does check off a lot of those boxes, a lot of those things that really cause people to lose money. They're really simple things, but it's those little simple things that knock people out of the game. All right, so you are going to have some instruction along the way. And not only that, you're going to get some support. Michael and Dwayne are readily available for mentoring sessions. You have me as backup, especially if you're trading with me. You can always ask me questions and send me screenshots and stuff like that. So that's fair game. Okay. So again, like I said, it's not a great way to start a webinar, but that's the reality of trading. Also, the one that's highlighted here, because that's what compliance wants me to do, is that past performance is not necessarily indicative of future results. Okay. And the funds that you put in the trading account should be risk capital. Okay. It should be funds that you can afford to lose. I know nobody likes to lose. Okay. I get it. I don't like it either. But the bottom line is, if something silly happens in the world, and if you lose everything that's in your trading account and some, because that's a possibility, that's not going to change your lifestyle. You'll be able to pay your bills and stuff like that. So that's what that paragraph really talks about. Okay. And then the last one, and then we'll get back on the path, is my relationship with CFRN. CFRN doesn't work for Daniel's Trading. Burt doesn't work for CFRN. Okay, there is a line in between us. Okay, and it's a thick line, and we don't like to blend anything in between the two because that breaks a lot of rules. Okay, the bottom line is that I represent Daniel's Trading. That's who I work for. Okay, I support the platform. The platform that you're looking at right now is DtPro. Their indicators are on DtPro. It's also available on Ninja. Okay, but I support this one. It's the same one that Michael and Dwayne are using, so that's a nice feature. Okay. If you have problems downloading the platform, the indicators, trade setups, you can always call me. Okay, I'm the guy that's going to pick up the phone. All right, that's the cool thing about that. You get to actually talk to a human being. Also, I handle the execution side of it. So down the road, if you decide, hey, I'm going to take the CFRN plunge and I want to do business and I want to use DtPro, I would handle the account forms, the execution, and all that other stuff. Okay, so that's my role. Okay, in addition, I'm in the room every single day. That's well advertised. I do the CFRN Thursday for a reason, and the reason is, my thought is, if if there's some way I can make you better at what we're doing, you'll stick around, and you'll be around longer. So everyone benefits, not only you but me. So that's why I spent an hour going over this. And a lot of times I'm going to sound like a broken record, but it is the same things over and over and over again. It just needs to be hammered. Needs to be hammered in a little bit. Okay. So those are our rules. And CFRN on our site, it's their trading tools, right? It's their indicators. They're the educator. If you have questions about Logic 247, okay, they're right here. If you have a question about that, you reach out directly to them. Anything about money, that's between you and CFRN. Okay. If it's about anything on their website, the tools, the webinars, Thursday night workshops, concierge trade alerts, all that stuff, you would reach out directly to them. Valerie is a good resource because she'll answer emails and take phone calls right away. That I do know. And it is fair game. If you want to reach out to me and say, hey, would you have Mike or Dwayne call me? That's fair game. Just let me know and I'll do the best I can to get a hold of them. Okay. The good thing is you have a resource in me that knows the setup, that knows the platform. You just have to ask. I'm not going to, tell you what to do and hammer you with phone calls. You just have to raise your hand. Okay. But you have someone to call all the time. All right. So that's it. We spent about 5 or 10 minutes going over that. But again, like I said, I've been around for a while, so I really don't like to tell people, hey, take a look at this, because chances are you're not really taking a look at it. And this really is for the new guys, all right? The guys that are new to the game, that don't understand the risk associated with trading. They get all the emails and the advertisements, how they can make tons of money, but no one balances out the risk portion of it, all right? And there is risk involved in it, and you shouldn't be blind by it. And this is a webinar that's, is an eyes wide open webinar, okay? And it starts with the disclaimers. So there you go. All right, if you are brand new, here it is, the trade setup in slow motion. So we're going to break this down, and then we're going to get into a live market, all right? First order of business is the time frame. We need to get on a 4-tick range chart, okay? I forgot to tell you guys, I am live. My phone's going to ring, so on occasion I'm going to have to pick up. So this is one of those times. So, I can't find the mute button, so hold on. Forgive me while I talk in the background. This is Bert. Hey, Bruce. All right, stand by. All right. Let me take 2 seconds. Bruce. All right. It's on its way. Sorry about that. Yep, you bet. Bye. Bye. Sorry. Forgot to send it to Bruce, and he was calling to say, where's my link? All right. Back on the path. So we're on a 4-tick range chart. That's the time frame that we're on. Now, let me get rid of that. Okay. 4-tick range chart. So if you have DtPro, okay, chances are you might be on a 30-minute chart. Okay, if you're following logic, you're on a 30-minute chart, right? Or you have a 5-minute chart up. Chances are you're on a time-based. What you want to do is get on that 4-tick range. So on the top left-hand corner of the chart, there's a little time button here. Okay, you just hit the drop-down button and go down to custom and select range bar. Make that one look like a 4, then hit OK. You're staring at the S&P E-mini on a 4-tick range chart. Okay, the first trap that people fall into, they get down to custom, they select tick bar, but they make that 2 look like a 4, and you're staring at something like this. If you're looking at this, it's just wrong. Okay, 4-tick range. Okay, the little parentheses and R in the upper left-hand corner is the tip that you're on the range bar. And the reason why we're on a 4-tick range is that, the height of each candle, no matter how small or big, is 4 ticks in height. All right. And what Michael is doing in the room, he could be a little bit proactive, right? So what he's going to do, because he knows the height of each candle is going to be 4 ticks, what he will do, he will start calling out the highs and lows of then the current candle. Okay, we will be right here. So if all the rules are in play, okay, all of a sudden you'll start hearing him calling out the highs and lows. What he's doing is he's going to be proactive, and he's going to place an order above the market if it's a bullish scenario, or he's going to place an order to get short in a bearish scenario. Okay, so if the market takes off, okay, he's taking advantage of it. So he's buying it on a stop, or he's getting short on a stop. Okay, and here is where the current market price is. Okay, that's what he's doing. I think on day one, once you're just beginning, like if this is your first, especially if you're on the trial, just just figure out the setup first, okay? Grasp the concept and think of it, keep it easy, okay? Thinking about not all the buy stops, sell stop scenarios, how Mike is doing it. Understand the concept first, the rules, and then once you understand it, then go inside the DOM and either left click when it's time to get long, or left click in the red if it's time to get short. Keep it real simple. Okay? Being proactive like Mike is trading 201. Okay? It's the next level, I think. Okay? Especially if you're brand new and you're just learning the DOM. I think left clicking is your better bet in the beginning. Okay? But the bottom line is we're on a 4-tick range because it can be a little bit proactive. Okay? And it smooths out the chart because we know, it keeps it smoothed out, and all the candles are the same height. Okay. All right. So the bottom line is that long-winded explanation about the time frame. Okay. The bottom line is we're on a 4-tick range chart. Okay. That's the key. Yes, the setup is good for the 30-minute, the 5-minute. Those guys are on the passport watching logic. A lot of the rules are applying on the larger time frames, and it's available on the dailies if you really like it. Okay. So yes, they apply to those time frames too. So if you learn it on the 4-tick range, you're going to be able to apply it to the longer time frames. Okay. All right. Nuts and bolts of this thing. Here we go. We're going to work on the top portion of the chart here. All right. The red and blue line is referred to as the MA1. There's nothing fancy about it. It's just MA1. The green line is called the BBC. That is short for bullish and bearish cross. Okay, together make up step number 1. This lights the match. Okay, if the MA1 is red and crossing the BBC, it's a bearish cross. If the MA1 is blue and crossing the BBC, that is a bullish cross. Okay, the one that's highlighted here is a bearish cross. So we're looking to get short. We're looking for shorting opportunities. All right. Note, I didn't say get short, get long, get short. I said we're looking for bullish and bearish opportunities. Okay. Buy setups and sell setups, because that leads us into step number 2. Okay. Which is this. After the cross, the normal thing for the market to do is to gravitate toward that BBC. That is a normal thing. That's what we're looking for. So not only are we looking for the test of the green line, that's our BBC, but then we're looking for a close in the direction of the trend. Okay? The trend was defined here. If the MA1 is red, you're looking for a red candle at that green line. Follow? If we get a bullish cross, that means the MA1 is blue, then you're looking for a up close or a blue candle or a green candle, depending on how your how your chart is set up. Okay, you're looking for a close in the direction of the trend. Okay, that's the bottom line. Okay, you're not just throwing an order in right here to get short. That looks fancy after the fact, right? Okay, what you're doing is you're substituting price for action. Okay, this reaction off the green line is saying, it might be a hint. It might be saying, hey, you know what? It's doing the normal thing. It went back to the BBC and it failed. Okay, that's one little extra variable that says, you know what? Maybe it's time to get short. Okay, so no, we're not placing an order there. We're waiting for it to get up there and close in the direction of the trend. Okay, now the curveball. As this market is gravitating toward that green line, okay, you are going to learn, and you're going to hear me hammer this through this afternoon. You are going to learn to draw a trend line. Okay, this is a habit you should get in the habit of doing. Okay, this is something you have to practice. Okay, you're going to get in the habit of drawing a trend line. Why, Bert? Why are we doing that? Because in some examples, as the market is gravitating toward that green line, it has so much bearish or bullish momentum, it won't get there. And then it'll just fall apart. All right. So if you're in a position and you are doing the right thing and drawing trend lines, if we get a close below that trend line, and step 3 is in play, which we'll get into shortly, okay, you're in a position to take action and take advantage of it. Okay, we never know if it's going to do the normal thing. Okay, so you have to get in the habit of drawing trend lines, period. Okay, so my advice to you would be this. One takeaway from this webinar, do this as soon as you get 2 candles, because it takes 2 candles to connect the dots, okay, activate this trend line. It's right here. Left click on it, okay, and start drawing them out. Okay, start drawing them out. Get in that habit. So as soon as you get the cross, here's a bearish cross here, activate the trend line, and as it starts gravitating toward that green line, okay, again, it takes 2 candles to connect the dots, start drawing. Okay, that's your homework. Okay, get in the habit of doing that. Okay, 2 reasons we do that. Number 1, we never know if it'll get to the BBC. That's the easy and obvious choice, right? But the other thing, and we're going to go over later, is that at some point, okay, the cycle turns a different color on us, right? And when it turns a different color on us, a trend line is required. But the bottom line is, if you get in the habit of drawing that in advance, and this does turn on you midstream, again, you're in a position to go over to the DOM and execute. You're not fumbling with a trend line trying to get it drawn and possibly missing an opportunity. You have the trend line drawn, you're in a position to push a button instead of drawing a trend line. Okay, you get that? So again, there is some importance of drawing the trend line. And by the end of the day, you're going to have a bunch of trend lines marked up, which is cool because that means you did it the right way. Okay. If you want to clear them all out, see this little select all button here at the bottom left? If you left click that and engage it, notice how that black X just highlighted, darkened up, left click, and that'll erase all the trend lines. If you're on a single thread like me, okay, you're going to have to do that, because if you're on an S&P chart and you go to a Dow and you go to a Bitcoin, whatever the market is, those trend lines on the S&P chart will be transposed to the Dow and the NASDAQ, and it's going to blow up the chart. So you're going to have to erase your trend lines or get in that habit. Mike's, his are floating, right? They're side by side by side, so they're individual. So all the trend lines he keeps them on there and they're just stuck there. Okay, he doesn't have to erase them for the most part. Okay, so step one is in play, right? We have the bearish cross. Why is it a bearish cross? Because the MA1 is red and it's crossing the BBC. So now we're looking to get short. Okay, we activate the trend line over here. Okay, as the market is gravitating toward that green line or the BBC, we said we are going to draw a trend line because we don't know if it'll get there or the cycle might turn color on it and it's required. Okay. Step two is in play because we get the market to touch the BBC, but we also get a close in the direction of the trend. Okay. So step 1 and 2 are checked off. So now your eyes gravitate toward the oscillator portion of the chart or the slingshot. And actually, guys, the trade exists down here. Okay, and I'll show you why. It's all down here in the slingshot. So some buzzwords here. The red and blue line inside the cycle is referred to, well, it's referred to as the cycle. Okay, that's the red and blue line. Okay, what that line is telling you, okay, the fact that it's red, it's telling you the momentum in the NASDAQ on a 4-tick range is bearish. Okay, it's red. If it was blue, it would be telling you the momentum is bullish. Okay, but to highlight this little area here, this is telling you, hey, this is bearish. Not only bearish, but look at the slope of it. Okay, sometimes we don't really talk about that in the training room, but if it's down at a 45-degree angle in the direction that you're looking, this is a bearish setup. So we want to be looking at a red cycle. Not only do we want to be looking at a red cycle, we want one that's got a nice 45-degree angle to it or a nice slope to it. That says, hey, dude, the momentum's pretty bearish here. Okay, so that red and blue line is referred to as the cycle. Okay, the green line, there's nothing fancy about it. It's just the green line. But here's the deal. With the green line pulling away from the cycle, just like a slingshot, right, pulling back the rubber band, okay, together with this price action here, okay, the fact that the market came up and did the normal thing and closed in the direction of the trend, okay, the green line pulling away in a market that's bearish, it's got bearish momentum, right, and it's got a nice bearish slope to it. It's saying, look, this is just a pullback in this ongoing downtrend. That's what that's telling you. All right. This space in between here that's highlighted, okay, That's the separation or the divergence that Michael is talking about in the room. Okay, so why does the trade exist down here in the slingshot, Bert? Because what we expect to happen in the end is this green line ultimately to come down, get into the cycle, right? What should price do? It's going to follow along. And when the green line gets into the cycle, this is where we take profit. Well, why do we do that? Because what we expect the green line to do is pull away. Get into the cycle, pull away, get into the cycle. Until what? The momentum turns bullish, right? We got a blue line. Momentum's bullish. It's got a decent slope to it. So what we're looking for is a green line to get underneath it. Pull away, get into the cycle. Pull away, get into the cycle. Okay? That is the normal thing. Okay? So what you end up doing is selling this rally, taking profit. Selling this rally, taking profit. Selling this rally, taking profit. Buying this dip, taking profit every time the green line gets into the cycle. Okay? So it exists here. Okay? So in the end, okay, if this is day one, basically, here's what you're signing up for. You're not learning to pick the top and pick the bottom here and trade it from point A to point Z. You're looking to take a piece out of the middle. That's what you're learning to do. You're on a 4-tick range chart, so you're looking at the market under a microscope. Because of that, you have to be engaged in the marketplace. That means you have to be in front of the screens, staring at what's going on. Okay? Not only that, every trade has an 8-tick stop attached to it. Okay, so what does that mean if I'm new? Well, that means if you're dead wrong and you're trading the gold or the crude, you're going to lose $80 a contract. If you're trading the S&P, it's closer to 100. If you're trading the euro and maybe the mini Dow, that's closer to $40. Okay, if you are dead wrong. Okay, so you're learning to take a piece out of the middle. Okay, now I'm going to go over the risk management rules once you get the trade on. It's aggressive risk management, so that means you're going to be moving the stop down pretty quickly. Okay, and as it moves down, you'll be trailing the stop, trailing the stop, trailing the stop until it's time to get out. Okay, so that's what you're signing up for. And because you're using aggressive risk management, that also implies a lot of trades. Okay, so again, we're not picking tops and bottoms here. You're taking a piece out of the middle. And the cycle is telling you, hey, this is the wind, okay? And the wind's at our back. When everything is the same color, there's another takeaway. When everything is the same color, bearish cross, red candle, red cycle, even a red MA1. This one's blue, but everything is the same color. That stacks all the probabilities in your corner. That's an easy and obvious trade, is what I call it. Okay? Those don't come out and come around very often. Okay? But honestly, for me personally, that's the one I would take and do less trades. Okay? The house probably hates me for saying it, but you know, the fact of the matter is, if everything's the same color, everything all stacks all the probabilities in your corner. Okay? So consider that too. Okay? All right. That's it. That's what Michael's doing in the room. I'm not going to go over momentum trades. He does that. Maybe that's for another time. But I'm just going to go over the one that's been around from day one. Okay. There's other things that have been developed. Okay. The 137, 164, all that stuff has been kind of developed along the way. This one has been around from day one. It works. So that's the one I stick to. Okay. All right. Let's get into it. All right. So I'm on a single thread. So all I'm going to do is click on the different markets. Okay. All right. The first thing before we push any buttons, okay, and the CFRN members should already know this, before we push any buttons, the market should be trending, period. Okay? we should be making higher highs or lower lows. All right. This is one of the biggest traps that people fall into because they don't know they're caught up in a sideways market and they don't even know it. So here's a solution. Okay. I'm not asking you to go to a 30-minute or a 5-minute or an hourly. We're on a 4-tick range. I want you to get in the habit of hitting the zoom out button right here. Okay? Because here's what happens. You get hypnotized by Mike's charts. It's not a knock on Mike. All right? But his charts are floating. And that means his charts are magnifying, right? So what might look like it's trending, hope I'm saying that right. Okay? If you hit the zoom out button just 3 or 4 times so you can see what's going on to the left of you, might say, you know what, we're not. We've just kind of stretched out the boundaries a little bit, okay? So get in the habit of hitting that zoom out button, okay? That will keep you out of the trap that I'm talking about, okay? That's the biggest trap because you have it up like this, okay? Let me see if I can't find an easy one to do. Notice the first thing I do. All right, so here's a perfect example of it. We might be staring at this, right? We get the bullish cross here. That's step 1, right? MA1 is blue, crossing the BBC, thinking buy. What's the normal thing for the market to do? Right, pull back to the BBC. What are we programmed to do? Draw a trend line after we get 2 dots, okay? There's the close above the trend line. We have a blue cycle, okay, and we got some separation, okay? Go long here, right? Fits the rules. All right. What's your point? Zoom out, zoom out, zoom out. Are we trending? No, we're not. Top here, bottom here, bottom. We're sideways, okay? That costs you 80 bucks right there, that stop out, okay? So get in the habit of hitting the zoom out button, please, okay? This red button here, okay? So again, you'll be out here. This will look good, look juicy, all right? But if you take a few minutes to do that, you might find, hey, you know what? Maybe we're just expanding the triangle or the sideways action. Okay, maybe we're just expanding the boundaries. Okay, that's a big deal right here. All right, so I would take note of that. All right, now trending. You know, that's something easy for any. Hey, the market needs to be making higher highs and lower lows. That's easier said than done, right? We talk about it, we throw the word around, and no, it's not that easy. If you're unsure, a few things. Number 1, lean on the dynamic support and resistance dots. Okay, if they're side by side, okay, after you go zooming out, that's an indication. See how that's where you can almost connect the dots. Okay, that's a good indication that we're sideways. Okay, so consider that. Hey, I'm not sure. Bert told me this thing about zooming out. I did that. I'm not sure if we're trending. 2 things that should register. Number 1, lean on the support and resistance dots. They're side by side. That's a clue. We're not trending. Don't push any buttons. But secondly, if you're not sure, don't touch it. Okay? Now here's something neat. Now we broke it, right? Now something must have just came out. Okay? But now we're under the trend line. Okay? So great. Something's going on. Market's running again, so maybe we have some kind of trade deal that we don't know about yet, but okay, either way. Looks like I just got filled on something. All right, so that was my point. Okay, hit the zoom out button. All right, that'll keep you out of some stop outs. Okay. All right. So we were talking about make sure the market is trending. Before I do anything, let me get out of the live account and get into demo mode. So if I screw something up here, I'm going to pay for it. So to be honest with you, I'm in demo mode, okay? I'm not shy in telling you that, but I don't want to screw up anything I have in a live account. All right, so we're looking for markets that are trending. That means we're making higher highs or lower lows, okay? Now, some news items came out, so this is just creating some chaos. But let's go to the next market. Let's go to crude oil. Next thing you should do, zoom out, okay? Are we trending, okay? We are making some higher highs here. What's good about this, okay, is that we did break dynamic resistance, right? Okay, so that could be considered a trending market. So consider that, okay? What I don't like about that, though, is as I zoom out, is that we did have some resistance here, and we're finding a little bit of resistance at the same level. So I wouldn't say that's something that's not easy and obvious, okay? We might just be trading in a larger time frame, sideways action here, okay? So right now, we'll put crude oil at parade rest, okay? Natural gas, okay? Here's something that looks pretty easy and obvious, right? I zoom out, we're making higher highs, right? Higher highs, okay? That one, perfect, okay? We found a little bit of resistance here, kind of scary, but we broke it. So that means we're resuming the trend, okay? So we are trending here, but I want to take a point here, okay? Because something's happening here that I want to show you. Okay, as we said earlier, the normal thing for the market to do is to pull back to the BBC, right? So like a good CFRN member, we draw a trend line. And we said the reason why we draw it, for two reasons. We don't know if it'll get down here. Well, it did. Okay. But secondly, the cycle, ideally we would like this. We'd like to see this, right? But here's the first close at the BBC, right? Okay. Our eyes gravitate toward the slingshot, and we have a cycle that's red. All right, so two things pop off. Number one, it's a different color, so that is watering down the probabilities. The second thing is that a trend line is now required. Okay, not only is it required, we need a close above the trend line before we can take action. Okay, so again, this is the reason why we get in the habit of drawing those trend lines. We don't know if it'll get there, but the cycle might turn color on us. Okay, I had a feeling my phone would ring after that burst, so one sec. This is Bert. Rico, do me a favor. I'm in the middle of a webinar. Give me like 25 or 30 minutes. No, you don't. You didn't know that. You don't know what my schedule is. So if you give me 30 minutes, I'll be happy to go over it with you. Okay, no biggies. Okay, that's it. That's where you find it. Yeah, all good. All right, you got it. Bye. Couldn't find the mute button, so sorry. All right, so second. Stand by. I got things popping up in front of me. All right. So the fact that this is red says, hey, okay, a trend line is required, but it's also watering down the probability. Here's the second thing. See how this is at a 45-degree angle against you? Okay, that's one of the big fat disqualifiers here. If it's a different color, waters down the probability, but if it starts turning over at a 45-degree angle against you, that means you're swimming against the tide, okay? That is the second disqualifier, okay? Don't push any buttons, okay? Now, a lot of times Mike's in the room, and he's drawing the trend lines, and the cycles are a different color, he won't take them if they're obviously a 45-degree angle. But if they don't have that 45-degree angle tilt to it, a lot of times he's taking those trades, okay? You have to decide whether you're going to go down that path or not. For me, easy and obvious is the path that I take, okay? That means everything is the same color, okay? But it's your call, all right? But I'm just warning you, if that starts curling over at a 45-degree angle, remember what we just talked about. You know, Bert said, you know, that might work against me. The results are usually sideways, against you, or you just get stopped out, okay? All it will take is one, where it goes like this, it curls over, and then it goes, and then you point the finger at me. You're like, man, Bert said not to take that trade. I would have bought it here. I would have sold it here. He sucks. All right. Most of the time, sideways, stopped out, or break even. Okay. Those are usually the results. So it's your call. Okay. But I wanted to point that out. Okay. Because that was a good observation, a good point to make in real time. Okay. So keep that. Remember that. Okay. Everything the same color. All right, let's go fishing. All right. All right. Drawing a trend line. Okay. Takes two candles as we gravitate toward the BBC, right? Okay, here's one of those examples. Okay. There's the close below the trend line. Plus, we got a cycle that's blue, but it also has a 45-degree angle. No trade. Okay. Go to the next one. And if we zoom out, were we trending? Yeah, I think we were trending. What I like about it is that we broke these. I really scrunched it up, but we broke these dynamic support levels that were trading sideways here. Okay, so I felt comfortable with that. Okay, let's switch guns to let's go to that crazy gold because that was rocking and rolling. Okay. Question is, are we trending? Okay, this concerns me here. We had a pretty heavy reaction off of this level here. Okay, that's nothing to shake a stick at. Okay, so you got to. That concerns me. Spurt. Hey, Paul, do me a favor, call me back, okay? I'm in the middle of a webinar. Okay. We are pulling back to the BBC, okay? So right now, that one's not so easy and obvious, okay? So we're going to skip on that. And the cycle, it's already red. It's got a slant to it, so we don't want to have anything to do with that one, okay? The crude oil, zoom out, zoom out, zoom out. Okay, here is the bearish cross, okay? There's the pullback to the BBC. Okay, there is the down close, but again, in all fairness, okay, we would make, for me, I'd want to see a new pivot low before I got short. Okay, so as you can tell, the trending issue, the trending deal is a pretty big issue, and it's a trap that people fall into. All right, so hold on, we'll go to some other markets. Let's see if we find this one's pretty easy and obvious, sideways, right? Okay, this one we don't even have to zoom out, but the support and resistance dots are side by side here, so nothing going on in the euro. Let's go down the line here. British pound, okay. We are trending here, so I'm comfortable with this, okay? We want to draw a trend line. Okay, something about the trend line. Number one, if you have a wick, start on the wick, top of the wick. If you don't have a wick, hit the corners of the body, okay? All right, this is where Mike gets proactive. Now listen up. If the low is 97, add 4, the high of that candle will be 131.01. Okay, you would right click at 131.02. Why? Because it takes a fifth tick to create the new candle. All right, a fifth tick. What are you talking about? All right, if you want to be, two ways you can get into this. Okay, so let me cancel this and dissect this. Okay, so first of all, we have the bullish cross here, right? We're getting the pullback to the BBC. We have a cycle that's blue, and we have the green line pulling away. Even the cycle MA1 is blue. So we got a lot of, everything's there, okay? And are we trending? Yes, we've made some higher highs here, okay? All right. Ignore this. I don't know what it is. No magic sauce. Don't get hypnotized by it, please. Okay, so we're waiting for the up close. If we get a close on the other side of the trend line, one, we can just left click and get into the market, okay? Or we can be proactive, and this is what Mike's doing. If you just take 5 ticks and add or subtract it from then the high or low, that's the number you click on. So if the low is 97, add 5, 131.02 is your magic number, okay? Now, that order's working, okay? We did not get a close above it yet, but if we do, we will get long, okay? And I have the order in at 131.02. Why not get long here? Because that candle has not closed. Now it's closed, okay? So let's do it. All right, so we're long. All right, so 2 ways. Here's that up close, right? You go inside the DOM and you left click. All right, that's what you do. All right, a few things are going on here. This button up here, it's called a bracket. Okay, I created a bracket for us. If you left click on it, notice how the bottom of DOM opens up and closes. Okay, what this allows us to do is have a stop loss automatically placed behind us, okay, as soon as we activate that button. As I said earlier, every trade has an 8 tick stop attached to it, right? All right, so here's what you do. If you select buy stop and sell stop, but you right click over it and go factor in ticks, just make sure there's an 8 in here, okay? That will automatically put the stop 8 ticks behind your entry, okay? That's what we want, 8 ticks behind the entry. So that's what you're seeing. Here's our entry, here's our stop loss, okay? All right, rules of engagement. Here's our entry, okay, 131.02. If the market moves 4 ticks in our favor or closes on the other side of the MA1, we move the stop to break even. Okay, what is break even? We will move the stop to our entry, which is 131.02. Okay, that's the game plan. How do you do that? Here's what you do. Oh, here's our stop. Left click over it. Keep your mouse down. Drag and release it. Drag, release it. Okay, that's all you have to do. Okay, let me make sure it's 8 ticks away. All right, so if it goes plus 4 ticks in our favor, the high's only been 05. Here, I'll put an alarm in. If it gets to 06, we're going to just drag that stop all the way up here and release it and put it right where we got in. Okay, so we have no risk on the table. Okay, if you want, yeah, you can put it 1 tick in front of your entry, so you have your fees paid for also. Okay, but the idea is to get it to at least that entry point. Okay, that's the bottom line. Okay, so that's it. Okay, that's all we're waiting for. We're waiting for the market to go up here so we can get the risk off the table. What do we expect to happen down here? Ultimately, we expect this green line to get into the cycle. Okay? What's supposed to happen is the market will make a new pivot high. Okay? That's what's supposed to happen. This isn't so juicy right now, but it is what it is. Okay? We are long from here. And the reason why we are is because we had the bullish cross here. MA1 was blue crossing the BBC. The market was pulling back. We drew a trend line, and that was the first close above it. Okay? We had divergence, so we had all the rules in play. Okay, so that's why we got in. All right. So now the stop goes to our entry. I actually put it a few ticks in front. Oh, now we're moving. Now we trail along with it. Notice how the green line is getting into the cycle, and we're at the resistance dots. Here's the point of the game where you exit at market and cancel. Get out of the trade. Period. No guessing. Right here. Okay. So that's it. Pretty cool. That one actually worked in our favor pretty snazzy. Okay. So that's why we did that from start to finish. Okay. And that was the British pound. That was just a market that was, that wasn't even one of the 4 or 5 that Mike trades in the room. It was just one that fired. Okay. Did everyone understand what we did, why we did what we did? Okay. That one, again, easy and obvious. Don't come around all the time, but you can feel confident that all the probabilities are in your favor. Okay. All right, let's move on. Zoom out, zoom out, zoom out. Why? Because that's what Bert said. Okay, we got support here. All right, so we're not going to touch the S&P on the short side until we break support. Okay, does that make sense? Okay, we need to break this prior low. Okay, and not break it, just poke our head under it and then come back above it. I want to spend some time down there. Well, how much time? Well, I want to see a few candles below it. Okay, we're starting to do that now a little bit. Okay, so notice how I zoom out, I can see a little bit more of the landscape of what's going on. Okay. What's good about this setup potentially is that we got a red cycle that's really got some slope to it, right? So if we're leaning toward the short side, which we are, and why are we doing that? Because we had a bearish cross here, right? The MA1 is red and cross on the BBC. That's step number 1. Okay, so we're looking for shorting opportunities. All right, so hold on. I am going to hit the mute button if I can find it. All right, guys, hang with me, okay? Got to take a few orders here. I haven't signed off, so hang in there, okay? All right, I'm back. All right. Live, not scripted, right? All right, so let me get rid of some of these highlighters so we don't confuse everyone and get back on the track, okay? So we decided, hey, we weren't going to take any action until dynamic support was broken, right? We kind of liked what was going on because a few things. We had the bearish cross, and we had a pretty cool cycle that was red and had a nice slope to it, okay? So what we were doing is we were waiting for the normal thing to happen, right? The normal thing for the market to do is gravitate toward the BBC. That was the first close in the direction of the trend, okay? Like good CFRN members, we draw a trend line, okay? And then we're faced with this at this point in time, okay? Two things. Number one, we have a blue cycle. That's not good for the home team. It waters down the probability. Caution. Number two, the trend line is required, and a close below the trend line is required because this is a different color, okay? What we especially don't like about this, and why we wouldn't take this trade, because it's set at a 45-degree angle against us. The same reason why we like it to go 45-degree angle in our favor, we certainly don't like it against us, right? So no trade, okay? Sometimes we get excited. The markets break in. We get the first retracement. We want to get short, participate. But this is telling us something different, all right? So exercise some patience there, all right? The indicators are saying no, don't do anything. Again, that's why a lot of the setup is going on in the slingshot, okay? All right, let's look at something else. It's already almost 2 o'clock, but I kind of got interrupted there. Zoom out, zoom out, zoom out. We are trending. Okay, we talked about this being a possible obstacle. We did. Okay. Not only did we break through, we went through it and some. So right now, a snapshot of what we're looking at in the gold, because that's what we're staring at. Okay, let's get over this high, okay, before we get excited about getting long again, okay? Now I know you might be staring at this, okay? But we have some resistance here. Okay, we're not making any higher swings, so gold, stand up parade, rest for now. We're not going to do anything. Okay, we need something that really sticks out. Let's go to crude oil. Zoom out, zoom out, zoom out. Okay. More of a hot mess here. Okay, meaning we got some resistance here, here, and it looks to me we've just kind of expanded this little triangle, this sideways action. Okay, so for the moment, I wouldn't be excited about it. I'll make a few points here while we're staring at this. Okay. In all fairness, let me draw that. Why am I doing that? Burton looking at the chart says no trade. Okay. Why? Because when I zoom out, I have a problem. I see support and resistance here. I have dynamic resistance printing right about here. Okay. Inside the training room, my gut feeling is Mike's on this trade, and there's a lot of good things here. So that's why I'm pointing this out. We get the cross. Okay. We get the close above the trend line, but look at the slope of the cycle. Okay. It's the same color, and it's got a good slope to it. Okay. Same thing happens here. Has a good slope to it. Okay. So my point is this. Okay. You're going to get some setups here. Okay. They may not be as easy and obvious as I'm advertising, the way that I want you to look at them. Okay. We talked about the importance of slope of the cycle. Okay. Sometimes you can get away with it if you got a decent slope. Okay. This one's a bullish slope, right? It's blue. It's got a nice 45-degree angle. Okay. Same thing down here. Okay. So if you want to live on the edge a little bit, okay, there's some opportunities here, okay. I would just make sure that you have some good slope to it before you push those buttons, okay. So again, that's when you might point back to me and say, man, I missed all this, okay, and you point the finger at me. But like I said, a lot of times you get what you're seeing here. You'll get some chop if we're stuck in a range, okay. And again, in all fairness, that's one I'm out of. I didn't participate in. That's my gut feeling is Mike's in that one, okay. So just to kind of balance this all out for you guys. All right, natural gas, okay. We're not going to touch anything here. Why is that? Because we have support here, okay. So I would like natural gas to get below the dynamic support dots before I would entertain getting short. What's cool about it is that we do have a red cycle that's got some slope to it. We have some divergence, so that's got some juice to it, okay. Let me check on the S&P. All right. Okay, notice it's just kind of instinct for me. I just hit the zoom out button just to see what's going on. Okay. Let's go to the euro. Okay, we do have some higher highs here. Okay, that means we broke dynamic resistance. Okay. Again, as I look left here and I zoomed out, I look at this as a market that's probably consolidating here at 2 o'clock in the afternoon. Okay, I wouldn't get excited about it. But again, if we're drawing trend lines, the top of the wick, corner of the body, so we don't have a wick here, and that's the up close. Okay, is the trend line required? Yes, it is. It is required because the cycle is red. Okay. Is the cycle at a 45-degree angle against us? No, it's not. So this is actually fair game. Okay, this here, a little bit of separation, that is a long. Okay, that close here. Okay, so again, let's just go over that again. Okay, dynamic resistance was broken. Okay, if we're leaning on support and resistance dots, we broke resistance. So that suggests the trend is continuing. Okay, so that's a good thing. Okay, so we go through the motions. Bullish cross, MA1 is blue, crossing the BBC. So we're looking for buys. Okay, at some point we expect the market to gravitate toward the BBC. We get 2 candles, we can connect the dots. Okay, we finally get a close above the trend line. Okay, and now we're faced with this color cycle. Okay, the fact that this is red, we know waters down the probability. The fact that this is red, we know that we have to close above the trend line. But the plus side of it is it's flat. It's flat, and it's not at a 45-degree angle against us. If it's flat, and we got some room here, separation, then this is a valid long trade. Okay, just note, okay, because this is turned red on it, it's watering down the probabilities a little bit. Okay. All right, let's look at a few more and then we'll call it quits. So what I'm doing, just so you know, is I have my chart and my DOM linked to the quotes. See this here? And see that here? Okay, that's activated. So what that allows me to do is, all I have to do is click on the market and it changes a quote, it changed the chart and the DOM. Okay, randomly we're looking at the Dow. Notice this one kind of hits you right in the face, right? is my point about the support and resistance dots. Side by side by side, okay? A side note here, if you're crazy about the YM and the mini Russell and maybe the NASDAQ, what you might consider is going from a 4-tick range to an 8-tick range, okay? It slows it down, and the rules are the same, okay? All the rules apply, okay? All the rules are there. The only thing that changes, if you're going to do that, is you're going to change your stop losses. They have to be commensurate to the time frame you're on or the scale you're on. So if we're on an 8-tick range chart, your factor should read 16. 2 candles, okay? 16. Okay, now you're ready to trade it. Okay, same rules. Get the bullish bearish cross, pull back to the BBC, you draw your trend line. If everything's the same color, that's good for the home team. Money management rules are the same. Okay, nothing changes. Okay, just your risk factor. Okay. All right, so that's it. That's a scoop. I'm sorry we got interrupted, but some things were hopping and popping, and I had to answer the phones. But the good thing is I think at least we got one off in that British pound back here. Okay, and I felt very strongly that was an easy and obvious trade to get into. That highlighted everything that we wanted. Okay, that wasn't, when it's something like that, it's real simple. You just go inside the dome and left click. Okay, there's not a lot of thinking with that one. Okay, so number one, if you're brand new, here's your syllabus. Okay, you're signing up to scalp. You're signing up to be in front of the screens. You're signing up to take, you're going to be trading. Okay, you're going to have to accept break evens and stop losses before you get started. Okay, you're gonna find that when you're in markets and you move the stop to break even, you're gonna find some frustration where the market comes down, hits your stop, and then goes in the direction of the trend you were following. Right? Guys have been around, are victim of that. I'm victim of that. It just happens. Okay. You have to find somewhere. You have to find some discipline somewhere. Okay, that means following the rules. So I don't know where you find it or how you do it. You got to write them down. But that's something you're going to have to do to be successful with this. Okay. Remember the trending thing. I know it's thrown around there loosely. Okay, easier said than done. The solution to that is hitting the zoom out button. And when it's not easy and obvious, don't push any buttons. Okay. You're on a 4-tick range chart. Okay. You're staring at 4 or 5 different markets. Okay. There's plenty of opportunity here. All right. So that's my answer to it. It's just pretty plain and simple. Get in the habit of drawing trend lines. That's the other takeaway. All right. As soon as you get the cross, start drawing them. Start drawing them. Even if you don't push a button and get long or short, just get in the habit of drawing these things. Okay. So thanks. At some point, okay, everything's going to be there. Okay. Just get in that habit. All right. And consider the cycle. Okay. We like when the cycle, again, is in our corner, when everything's the same color. But not only that, right, we like the slope of it. Okay. 45-degree angle at our back is good for the home team. Okay. We experienced that in the British pound trade we took. Okay. So remember that. Certainly if it's going against you, that's a big fat no-go. Don't push any buttons. Okay. That's usually the biggest trap. Okay. And the cycle thing, where it turns different colors, that gets a little murky for people, okay? Unfortunately, you have to lose some dough before you realize, or you just say, hey, I gotta stop this. All right? You find discipline that way, unfortunately, when your pocket's a little lighter. All right? So that's it. All right, so every Thursday for an hour, we're going to do the same thing over and over and over again, and I'm going to talk about the same things, okay? The idea, if you're brand new, this is your cheat sheet. This is your eyes wide open thing, okay? This is your syllabus. If you're already a CFRN member, you're more than welcome to hang out, ask questions, see how I'm observing things, okay? If you're spinning your wheels, okay, chances are you're probably falling into the same traps that I'm talking about. Hopefully some of the solutions that I brought to the table get you over that hump. If not, okay, you can always call me or shoot me an email. We can do something one-on-one. I don't care. Or, share screenshots, okay? That's fair game. You have at least a live body to talk to that knows the setup, knows the platform, and knows what the hell they're doing about trading, okay? You just have to ask, all right? That's it. I record them. They're on YouTube. If you go to YouTube and you go to CFRN Thursday, if you search that in the little search box, they're all recorded, okay? And, you can always subscribe to it. If you subscribe to it, anytime I post something new, you get an alert, okay? I subscribe probably to 2 or 3 other dudes, including Dwayne. So when I get something that pops up, it's just kind of nice to know that something's been posted, and you can go back and review it, okay? So that's it. All right. I'm going to shut it down, and I'll see you in the training room tomorrow, or I'll see you next Thursday.